We are at that point where the exponential growth curve becomes really painful. You know, when you're talking about something that you make 5 of, making 10 of it the next year, that's easy. And then maybe 20 of it the next year is also easy. But when you're going from, you know, making millions, like Tesla did 1 million last year, to 2 million, and everybody in the industry is trying to double in that way, it does really become a scale problem. If we stay on pace, which we're currently at, like as an industry of growing 50% year on year, it does seem possible that within 20 years, the 300 to 500 terawatt hours of batteries will be built. It's kind of nutty.
In this video, Tesla executive Drew Baglino talks about Tesla's biggest risk this decade, the really painful path going forward, and what needs to happen globally for the world to successfully transition to sustainable energy generation, storage, and supply. And if you listen closely, you'll realize Drew is also explaining how Tesla has won the decade. So let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks. Check out the links in the pinned comment below. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. You can also pick up some Tesla, Elon, and investment theme merch in the merch store, so check out the links in the pinned comment below, and thanks for your support. First up today, Tesla stock strangely behaving itself, up a mere 1.72%, about $11 per share, closing just over $650 per share. I've got to say it again, still to me, in my opinion, as far as I'm aware, the best risk-adjusted opportunity in the stock market by a huge margin. I'm sure there's better opportunities, I just don't know of them. Nasdaq 100 today, up 1.25%. Amazon stock today, up almost 2.5%. Apple stock up over 1% today. Google's parent company Alphabet stock up over 1%. Rivian Automotive down almost 0.69%. Everybody's favorite Saudi-owned EV maker, Lucid, up almost 7%. And further evidence that the bell curve continues to be real. Nikola stock today up well over 8%. And just finally, the ARK Invest flagship fund, the ARK Innovation ETF, up almost 5%. For those of you who aren't aware, who is Drew Baglino? Here we are over on Tesla's website under corporate governance. As we can see here, Drew is one of the big 3 at Tesla, the leadership group of Elon Musk, Zach Kirkhorn, and Drew Baglino. Quote, Drew has served as our Senior Vice President, Powertrain and Energy Engineering since October 2019. Literally a month before I started this YouTube channel. Previously, Drew served in various engineering positions continuously since joining Tesla in March 2006. This means Drew has been working for Tesla since before some of you were born. Drew holds a BS in electrical engineering from Stanford University. So, Drew is a competent engineer who, over the last 15 or so years, has worked his way up from Tesla in various engineering roles now to being part of the big 3. In other words, Drew's not only competent, but intimately familiar with Tesla and clearly knows what the fuck he's talking about. And now let's hear some comments from Drew returning to his place of study, giving a short talk at Stanford University relating to energy, Tesla, electrification, sustainable energy generation, storage and supply, battery materials, battery supply chain, Tesla's biggest challenge, and why they've already won the decade.
We are at that point where the exponential growth curve becomes really painful. You know, when you're talking about something that you make 5 of, making 10 of it the next year, that's easy. And then maybe 20 of it the next year is also easy. But when you're going from, you know, making millions, like Tesla did 1 million last year, to 2 million, and everybody in the industry is trying to double in that way, it does really become a scale problem.
Just want to take a quick moment here. Drew immediately pointing out that we are now at the point where the exponential growth curve becomes really painful. Now, let's take a step back here. Of all the companies on planet Earth attempting to produce electric vehicles, to build battery cells, energy storage, which of these companies so far has demonstrated an ability to suffer and endure intense pain and still get it done? In addition, which companies on planet Earth, or company, if there are any at all, had the foresight, the foreknowledge, the wisdom, the vision, and the courage to not only look into the future, determine what that future would look like, work backwards and figure out, okay, well, what's required to get to this future, and has been taking the necessary steps now for 5, 10, 15 plus years. Spoiler alert, there's only one answer to this question. Tesla. Given this, and given we're now at the really painful part of the exponential ramp up in global battery production, who would you be betting on to survive this transition, to endure the pain, and to get it done? Alternatively, who would you be betting on to, when things start to get a little bit painful and difficult, just go cry in the corner and ask for daddy to hold them?
If we stay on pace, which we're currently at, like as an industry of growing 50% year on year, it does seem possible that within 20 years, the 300 to 500 terawatt hours of batteries will be built. It's kind of nutty. It means we need to get the global annual production capacity of batteries to like between 15 and 20 terawatt hours a year, which is crazy. We're barely at a gigawatt hour now, and not really at a gigawatt hour. There's a lot of like inflated numbers versus what was actually produced. So it's massive growth, and the difference between like, I don't know, growing iPhones by 50% a year and a car battery or grid storage at 50% a year should be obvious to all of you. Like, there's a lot more mass in a car than in a phone, and that mass has to come from somewhere. So ultimately, that mass, largely the cathode, largely our highly refined transition metal, needs to come out of the ground, and with the like ore ratios that exist of 100 to 1 or 50 to 1 if you're lucky. Maybe you can get 20 to 1 depending on the resource. If you go to manganese, maybe you can get 10 to 1 or 5 to 1. It's still a lot of earth that needs to be moved at least once to get that 300 to 500 terawatt hours out of the ground.
So if you were listening closely, you'll have heard Drew point out that there's a significant amount of earth that needs to be moved. Now, let's think about this. Bird's eye view. Tesla's mission: accelerate the world's transition to sustainable energy generation, storage, and supply. We all know this. We've also heard from Tesla that they'll solve whatever the bottleneck is at that point in time, whatever it takes. Clearly, one of the biggest challenges, one of the biggest bottlenecks is moving many metric tons of earth, physical earth, digging out of the ground. This needs to happen. What are the odds that Tesla literally needs to get down in the dirt? I would personally conjecture extremely likely. At some point, it's inevitable. Tesla either starts partnering and working directly with mining companies to help them with their extraction and refining process, and or gets into mining directly themselves. Don't forget, there's a lot of technology with the boring company that will be able to be shared with mining companies if it's suitable, if it makes sense, if it can help them. So there's going to be a little bit of crossover between the boring company, Tesla, and mining companies in the future. But this is really important to understand. We hear somebody from an automotive manufacturer describing one of the limiting factors, one of the biggest bottlenecks, one of the big hurdles here is the absolutely enormous amount of earth that literally needs to be moved at least once. This is a fairly strong leading indicator of some of Tesla's future announcements. And here's another bit of a spoiler. If you don't hear other automotive manufacturers talking about this same challenge, the physical amount of earth that's required, they may be many, many, many years behind where Tesla's at this point in time.
And that is a big challenge in front of us. Is for a while, the battery industry could scale within the constraints of the entire economy that exists of materials and of refining and of chemical production and everything. But we're not really there anymore. We need to invest in our own everything, which is an opportune time when you're investing in your own everything to reevaluate what you're investing in. To date, the battery industry has been on the coattails of everybody else. So nothing has been like deliberately built for it. Full supply chain, that is true. Like the electrolyte is being built at some oil refinery that's doing a whole bunch of other petrochemicals, and like the electrolyte is a side business, and honestly, it's kind of annoying. The graphite historically also has been coming out of some petrochemical process, or maybe some coal mine kind of thing, but has again been sort of a secondary thing that they could make some money on. There hasn't been a lot of like dedicated investment in specific battery materials and refining processes.
Again, just want to take a real quick moment here. One word: disruption. Drew's pointing out here that thus far, the entire global battery industry hasn't actually been pushing itself forward as much as being dragged forward by innovations in other technologies. Oh, everyone's buying laptops. Whoa, we need some batteries to go in the laptops. Oh, everyone's buying mobile phones. We need some batteries to go in those mobile phones. But now there's a huge shift. Instead of the technology dragging batteries forward, the battery industry itself needs to start driving the global economy forward, because the entire economy needs to transition. No longer are batteries just a thing inside some things. They're going to be driving the entire global economy. In essence, there is a lot of very low-hanging fruit for Tesla to go after in terms of disruption and innovation. This may explain why Tesla, the automotive company that makes cars, was able to invent the world's best battery cell. LG Chem could have done it, but they didn't. Panasonic could have done it, but they didn't. CATL could have done it, but they didn't. And again, why is this? Because the battery industry itself wasn't driving the world's economy. Tesla have sat down and done the math and realized they need to take charge, pun intended. So expect enormous innovation across the board, new technology, new refining processes, new materials. Everything you can imagine is ripe for disruption and a huge amount of innovation.
And that is changing, which is great. It's a big opportunity for a lot of different players to dedicate their mental efforts towards something that is needed to achieve this scaling. On the battery making side, specific to battery making, like the cathode synthesis or how electrodes are made or cells are assembled and battery packs are made. Sure, there's been bespoke investment. It's a bunch of unique stuff. But even that is not scalable like it needs to be to go to the huge multiple we're talking about.
In your leadership of Tesla, how do you see this scaling, just being, as you mentioned, pragmatic and scaling up, but also constantly looking out for ways to improve? Can you maybe comment on a couple of exciting directions you're thinking, how you can change the next set of factories you build?
Yeah.
Mining processes.
Sure. I mean, I think the kinds of stuff that we've been focused on within the scope that we've taken on to date, which has been kind of like cathode and up, we've really been thinking about the typical things that you think about when you're making bread. Like the last bread factory could do 1,000 loaves an hour. I want the next bread factory to do 5,000 loaves an hour. Like, what do I do? Do I change the chemistry and a little bit more baking soda, a little bit more magic pixie dust, and it just rises faster? Or do I get a bigger oven? Or, is my mixing going from 1,000 liters to 10,000 liters? Is that how I make 5,000 loaves versus 1,000? That's kind of things manufacturing engineers have done for a while, and we're doing that with the bigger form factor cell and the more efficient assembly lines and the slightly different electrode processing that we're doing. That's all about how do I make that same factory do 5,000 loaves an hour, same footprint or smaller, do 5 times to 10 times more than it did before. But that isn't the fundamental bottleneck of the next 10 to 20 years of battery growth. It really is the raw materials.
There it is again. Emphasis, the limiting factor, the bottleneck, the primary constraint is raw materials. If you're a Tesla stock investor, please do some thinking. If Drew Baglino is saying, the biggest limiting factor here is raw materials, Tesla is absolutely hell-bent on accomplishing their mission. Read between the lines. It's obvious. It is inevitable. There will be some big announcements coming from Tesla in the coming months and years regarding raw materials. And as I pointed out earlier, until you hear other automotive manufacturers discussing raw materials, the same constraints, and not only that, but the specifics of what needs to happen. Not just, it's going to be hard to get batteries, but talking about, we need to improve lithium extraction, yields from blah, 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 all this kind of stuff. You know just how far behind they are.
Because, as I said, we've been in the coattails of everybody else's raw materials industry, and we haven't built our own. So, okay, what do we do there? Where are the big fulcrum levers to, that academia and other researchers that, everywhere can enable us to scale faster? So the biggest risk area at the moment, again, I mentioned lithium 3 times already, is really lithium.
Another very important clue from Drew that was not meant to rhyme. The biggest limiting factor within raw materials, which itself is the biggest limiting factor, lithium. If you guys recall, Tesla has actually developed their own method for extracting lithium more efficiently and economically than anyone else on Earth. The caveat there, we're talking about, I believe, from clay. Won't go into all the boring details there, but this is again something to be aware of and to focus on. The biggest limiting factor is raw materials, and within raw materials, the biggest limiting factor is lithium. Obviously, we're likely to hear a lot more about Tesla and innovation in terms of lithium extraction and refinement in the coming months and years. Stay tuned for that. And again, this is another leading indicator. Until you hear Mary B.S. Barra, Jim Farley, Herbert Diess and so on talking specifically about lithium, they're behind. And exactly how far behind? Well, maybe we take Drew's comments as a watermark, let's just call it mid-2022, and count. Does Volkswagen start talking about the need to massively increase lithium extraction and improve the refinement process in a year from now? In mid-23 or mid-2024. That'll indicate how many years behind, how embarrassingly far behind these companies are.
One other thing on the scaling, and again on the raw material side, the other thing is, and maybe you've heard people talking about Tesla using something other than just nickel. For sure, we're equal opportunity cathode company. Whatever, seriously, whatever can be, sensibly mined and refined without undue environmental damage or social destruction, and is like reasonably available, and we're not doing crazy things in crazy places, like we're willing to entertain using. Recycling is the end game for sure. So we get the 300 to 500 terawatt hours built. We get, let's say, 90 to 95% recycling efficacy. That means only 5 to 10% virgin material. And recycling, just as a total embedded energy and embedded cost way to get these resources is like an order of magnitude-ish lower cost and lower embodied energy. So it's a huge and obvious end game. Ultimately, it does make sense for there to be a local supply chain for energy storage on every continent. And, similar to every other new economy thing, China has does a fantastic job of like investing in what is necessary to get the job done, whether it's solar or batteries or otherwise. And the rest of the world lets them do it. And the industry around that sees that happening and sort of like follows the capital, and then you get what you get. I think there's no reason why China is the only place that battery materials are largely refined and synthesized today. Like, there's not a good reason, right? It just is where the capital has gone because of government intervention.
When you came out with the Roadster and the Model S, you probably had some internal predictions on when the battery would fail. And now you have the data.
Yeah.
How was your prediction at that time? Because you knew a lot less back then.
Yeah, we were very pessimistic. we were unnecessarily pessimistic about how long the batteries would last.
Just quickly want to point something out here relating to the whole competition coming for Tesla instead of embarrassingly fast all over itself. The original Tesla Roadster dates back to 2006. 16 years ago. Tesla has 16 years of experience with battery technology, integrating battery systems into electric vehicles, thermally managing them, dealing with all of these issues, and they have the data to learn from. Most other automotive manufacturers don't have this luxury. They don't have a decade and a half of experience. They don't have a decade and a half of wisdom or learnings. So these same companies will be going through the same process that took Tesla 15 years of experience to get to where they are now with their level of expertise, and they still have a long way to go. Everyone else attempting to compete with Tesla has to go through that same learning curve. Tesla has learned from so many mistakes they've made along the way. Other automotive manufacturers and EV startups haven't even started making the mistakes.
Electrochemically, we were over-optimistic on how long they would last for all the other reasons. So, we had water ingress issues at the battery pack level that had nothing to do with the cell that we had to learn about how to deal with. We had a lot of, there's a lot of electronics in batteries to monitor all the cell voltages and do all that stuff. And we had learnings about ways in which electronics can fail, and maybe whether or not they should be serviceable so that that's not a reason to scrap a battery. We had some learnings about, shock and vibration or thermal cycling that don't show up until you've been in the field for 10 years that had nothing to do with the cells.
Translation, we've learned lots of things that other companies have yet to learn. Some of them required 10 years. 10 years, we just heard Drew say 10 years in the field with the technology deployed before they'd learned the lesson. So again, think about everyone attempting to catch up to Tesla, the so-called competition. How many other companies out there can say that they've had high volumes of electric vehicles on roads now for over a decade? I could count them on half a hand.
Honestly, looking back on it, the cells have outlasted our expectation. Outside of the cell has come short of our expectation. Yeah, the factories are not the issue at the moment, honestly. Like the permitting and construction timeline of a battery factory or a cathode factory that does the cathode synthesis, or even like the anode finishing stuff for the anode, it's maybe 2.5 years from like beginning the process to ending the process and ramping production. You could do it a little bit faster. It might take you a little bit longer, but that's really not the bottleneck on the 50% year-on-year growth. It's the fact that there's enough lithium in Nevada to produce enough batteries for all of the vehicles in the United States. But the last mine to come online in Nevada took 10 years to get permitted. That is the bigger issue. It is that issue. It is the resource extraction timelines in most of the developed world, and most of the developing world now too, are just extended.
And again, going back to that limiting factor, it's the raw materials, in particular the timelines. It can take a decade plus for a mine to go from potential to actually extracting the necessary materials. Huge innovation and disruption needs to happen here too.
For some good reasons and some not so great reasons, And that's where kind of like the direct hand of government could help improve that, you know. And it's not like there should be no environmental process. That's not what I'm saying. It's just we need to find a way to not have like 3 in a row, which is typically kind of how it works, where it's like you do one and then like it's reevaluated again by another group and then another group, and then like every step along the way there's many opportunities for public comment and lots of thousands and thousands of pages to write. So that's the area where you know, it's not the factories. The factories are easy. It's the mining and refining that is slow, that needs to be accelerated.
Drew is really banging the drum here on raw materials. And now a quick question as to why Tesla doesn't do battery swap. Now, if you're a long-term viewer of the channel, you'll already know the reason to this. It's completely fucking brain dead. It makes no sense. It's poor use of resources. You've got a ton of batteries sitting around doing literally fuck all, which could be in vehicles instead. This limits how many vehicles you can actually produce. Remember, batteries are the limiting factor at this point in time. Does it make more sense to have 20 batteries sitting in a fucking battery swap station doing nothing, or to have 20 vehicles on roads that have been sold to customers? This is really poor use of capital. It just makes no sense. I've taken a dump on this strategy. I think NIO's doing this over in China. Yeah, it looks cool. Oh yeah, look, you swap your battery in 5 seconds. But from a business point of view, it's absolutely moronic. So let's hear Drew Baglino's explanation as to why Tesla hasn't done this absolutely idiotic thing.
We sort of looked at kind of like if you imagine charging as a standalone business, like with profit and loss lines and OpEx and CapEx to make it go. That's what we evaluated when evaluating like swaps versus charging infrastructure. And kind of like when you have the swaps, you still need the charging infrastructure, but now you need the swapping infrastructure too, and the storage infrastructure for the swap batteries, and all of the like mechanisms to do those 2 other things. So it's just on a pure P&L basis to like provide the same function to people didn't seem to make sense. And you know, I'm responsible for Tesla supercharging actually, and we run it like a business, and it has its own P&L, and it needs to be profitable in its own right. And we look at all the costs, and you want to do the absolute bare minimum at the site to make the charging possible. And swapping is not the absolute bare minimum really at all. And if you look at some of our videos, like the pinned tweet on Tesla charging on Twitter, and I'm not a Twitter person, I'm just telling you. If you look at the pinned tweet on Tesla charging, there's a video of us building a supercharging station, like I don't know how many stall site in Florida. You know, it's like 4 days of work, and it's all wired up, and the last 4 days are like landscaping to make it look nice. That is what you can do with charging that you can't do with swapping. It's never going to be like that. Yeah.
So I think the short story there, battery swap, inefficient, wasteful, unprofitable, unnecessarily complicated, and just plain stupid. Also very interesting to note that Tesla's supercharging business is actually operated as if it's its own business within inside Tesla that needs to be profitable on its own. I suspect this is how every subdivision within Tesla actually works. Elon's talked in the past about thinking of Tesla as a number of startups rather than a single company. Over the long term, obviously, every single arm of Tesla's business will need to be profitable and make sense in its own right. Hope you guys and girls have enjoyed this video. As a Tesla stock investor, understanding this stuff is extremely important. And when you got one of Tesla's big 3, Drew Baglino, explaining the biggest bottlenecks, the challenges, really painful part of the exponential ramp, the incredible amount of earth that literally needs to be moved to help the world transition, and the biggest limiting factor within raw materials itself being lithium, we have a lot of potential clues about announcements we'll hear from Tesla in the coming months and years. And once again, I want to point out that until you hear these same kind of comments coming from executives within other automotive manufacturers, you'll know just how much further behind Tesla they truly are. So don't say I didn't warn you. And lastly, don't forget you can join Patreon with the card in the corner or the link in the pinned comment to gain instant up-to-date access to my 10-year Tesla stock price targets in the bear case, the base case, the bull case, and the hyper bull case, plus the ability to participate in future Q&As and access to well over 100 exclusive videos, loads of content and perks. So see you over on Patreon. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content content and perks and get some free stocks and crypto. Check out the links in the pinned comment below. You can also pick up some Tesla, Elon and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.